This is Scott Becker with the Becker Private Equity Podcast. Here are 5 quick notes today, and thank you for listening. As appreciative to all of this, some bad stats this first quarter this last month. First, GDP grew slowly at 1.6% the first quarter. Second, inflation ticked up to add insult to injury. More inflation, slower growth, what we used to call in the 70s, and excuse me for dating myself, stagflation. And Jamie Dimon recently had a statement about the potential for stagflation. So that was sort of that. Then I'll give you 5 other quick notes. First, Facebook Meta Platforms, even though they had good results for the first quarter, said that they expect their CapEx to go up and their profitability to slow. And this led Facebook Meta Platforms to be down 12 to 14% overnight. I'm not sure where it sits right now. The market itself is down 1% or so. Second, this also led the futures to be down this morning, but now the markets are responding even more so to GDP being slower in growth and inflation ticking up a little bit. As to Meta Platforms, again, Zuckerberg famously named last year the year of efficiency. This year in his talking points for the first quarter and going forward for the rest of the year, said that he expects a good deal of investment versus a year of efficiency. Last year, he proved to the markets he could still deliver huge cash flow. This year, it looks like there'll be some more reinvestment in the company. Third, Tesla, for the first time in a while, jumped almost 12% yesterday on a commitment to lower cost vehicles and trying to grow market share. It's still down about 34% year to date. Fourth, the FTC passed a really broad ban on non-competes, and you'll hear a lot of comments and analysis on this coming days, coming weeks. Some states already do ban non-competes. The American Hospital Association, amongst others, essentially said that the FTC has run amok and way outside of their PowerPoint and what they're allowed to do, a clear sign of an agency running amok. I think many people feel that way just because the FTC is so active in a way we haven't seen in a generation, I think. Fifth point today, or quick note this morning, is private equity leverage deals. We're hearing more and more about private equity leverage deals where the platform deal ultimately went fine, but then the bolt-ons have been done at such expansive debt levels that the companies find themselves in much more difficulty than expected, especially with the sort of margin slimming on some of those bolt-ons and the debt costs being higher than expected. So overall, a challenging time for some of those private equity leverage deals. We'll see how that plays out over the next couple of years and what we're hearing and seeing anecdotally and how it ends up playing through in the markets. Again, those are 5 quick notes this morning, starting with the seriously sad note, I shouldn't say sad, about stagflation, stagnant growth, high inflation. We say in our other podcast that, there's an old Animal House phrase, that dumb and stupid is no way to go through life. Well, it's very similar. Low growth and high deficits is no way to go through life either. Please text me, 773-766-5322. If you're one of the first 2 people to text me and you don't text me a lot for this gift card, we will send you a $50 Amazon gift certificate. Thank you so much for joining us on the Becker Private Equity and Business Podcast. And thank you to Chanel Bunger, the best in the business, our producer. We appreciate your help every day. Thank you very, very much.